Ladies and gentlemen, welcome back to the channel. Here in this video, we will go over what's causing Tesla's stock to fall about 1.7% at the time of recording this video. We do also have some pretty big Tesla stock news that not a lot of people are talking about, but could be important for you to know. So let's start with the biggest piece of Tesla stock news today. And it is this: Tesla is offering FSD's price for a minimum of $4,500 to clean up its inventory vehicles. The end of the quarter is the best time to buy a vehicle. And you can see here, as of September 20th, FSD is being offered for $4,500 for inventory vehicles, which I do think's very interesting. And really why that is because if you're Tesla and you're making these vehicles and they're sitting in inventory, that's a problem. Inventories are a problem. Inventory is not good. In a perfect world, you would sell exactly the amount of vehicles as you manufacture and you would have zero inventory. Well, if Tesla does not sell through that inventory builds up, and that becomes negative for Tesla's earnings. Think about it like this. If Tesla manufactures 450,000 vehicles in a quarter, okay, but sells 430,000 vehicles in a quarter, there's 20,000 vehicles that Tesla has to recognize the cost for producing those vehicles, which is about $37,500 per vehicle. That is a net hit to Tesla of about $750 million, let's say, in a quarter. So if Tesla can run through that inventory, assuming that, Tesla's average selling price is still around $42,000 or so, that would bring in $840 million and offset that and boost Tesla's profitability. So I think this could be a good move to do heading into the end of Q3. Now, I do like to keep you guys informed of the global inventory numbers, and for the most part, they actually have been falling from the higher levels that they were at. The Model Y reached a high of 7,800 in the last quarter. It's now down to 6,200. That's still pretty elevated, but down from where it was. The Model 3 as well was at about 6,500. Now it's down to about 4,100. So drawing down inventory quite nicely. Same's true for the Model X. At the high was about 4,800 vehicles in global inventories, now 3,500, and the Model S hit a high of 3,700 vehicles in global inventory, now down to about 2,500 vehicles in global inventory. So Tesla is definitely trying to run down that inventory as they are keeping the Giga Shanghai plant up and operational at max capacity. And yes, Tesla is doing very well over in China, but inevitably running a factory at max capacity, you are going to start building up some inventory unless demand just stays constantly strong, which is not probable. Even at the best companies, demand is, I don't want to say hit or miss because that implies there's no demand, right? But it does vary and fluctuate. So we will see if this does have any impact to running down Tesla inventories. It is kind of a negative sign though, for the total inventory number. If they are not able to run down a lot of these inventories, then it's going to say Tesla probably built up some inventory in the quarter. Now, there is typically a shutdown either in Q3 or Q4, about 2 weeks every year, to do maintenance and upgrades at the various different factories. So it's not uncommon to see inventory build up during this time of the year, and we'll see what Tesla says about that. The biggest event for Tesla stock coming here in the near term is the Robotaxi event on October 10th, and that is what is going to dictate really what happens next for Tesla. Now, I will tell you today, Tesla's down about 1.6%, and there's really macro reasons for that. As I shared with you in the last video, FedEx's CEO had some pretty negative things to say about the state of the economy, and I made a video about this last night, so I'll just read this part. The CEO said industrial demand was softer than expected. Shipments between manufacturers and other companies in the segment are the most profitable for FedEx, which is often seen as a bellwether for the U.S. economy. Quote, the magnitude of the Fed rate cuts yesterday signals the weakness of the current environment, referring to the Federal Reserve's decision to cut interest rates by 0.5 percentage point on Wednesday. So markets were kind of caught off guard because, on the 18th, 2 days ago, the Fed cut rates 50 basis points and said everything was fine. And then yesterday you had FedEx that said, you guys seen the Fed's rate cut yesterday, the 50 basis point cut? That just shows you how bad things are. So what's really going on here? Do you believe the Fed or do you believe corporate America? Corporate America is telling you one thing, the Fed's telling you another. Someone is not being truthful. And Wall Street's sniffing that out. And when there's uncertainty, stocks come down. Now, Tesla also had a 7.4% green day yesterday. So you're just giving a little bit of it back. And overall, Tesla stock still looks pretty damn good. You are sitting in this gap fill level. Technically, you want to get above 246 to fill the gap, and then that's where you can start to see a lot more explosive upside. So even though we're down today, Tesla stock still looks really good. And I do think we will continue to see this push and pull between what the Fed says and what corporate America says. And I'll give you just my opinion. You always want to listen to corporate America because the Fed has zero mandate to be honest with you. They tell you what you need to hear, what helps their dual mandate. Whereas corporate America, like a CEO, if they lie to you, they will go to prison. So I'm going to go with corporate America on this one. For this earnings season, yeah, corporate America is the ones you want to listen to as far as how good or bad is the economy. Elon Musk posts on X, Shanghai just experienced the most powerful typhoon in 75 years. Best wishes for the resilient and resourceful people of Shanghai. I have asked our Tesla Shanghai team to help anyone in distress to the best of our ability. So we will also see if that does have a negative impact to Tesla China. If some supply lines are disrupted, we'll see. It doesn't look like it at this point, but it's a possibility. Tesla has released Model 3 and Model Y puddle lights in North America for $65, $90 over in Canada. Quote, projection lights represent a high-definition Tesla word mark onto the ground every time you open the door. Includes 2 easy-to-install projection lights for the driver and passenger's side doors. And I do think this is coming to the next generation vehicles that Tesla produces for no additional cost, okay? Because this is just kind of what you see on newer vehicles these days are these projection lights, and they are really cool and apparently really cheap to install as well. Tesla Scope writes on X, V12.5.2.1 is now going wide with a larger wave than earlier today, now the same size as all 6 waves prior. This is also including more builds that are included up to the latest version. All 108 Tesla Megapacks have been delivered to the Greenbank Battery Project in Logan, QLD, Australia. This is $300 million worth of grid-scale battery that will enhance the grid reliability and drive further improvements and efficiencies across the network. So it looks like Tesla's energy business continues to be on fire. And the Biden administration said today it plans to award $3 billion to 25 battery manufacturing sector projects in 14 states as it works to shift the supply chain away from China. The 2025 Rivian R1S and R1T tri-motor is now shipping with 371 miles of range, or up to 405 miles on conservative mode. It's the first time Rivian has offered a tri-motor configuration on its flagship EVs. Android Auto gains support for EVs that can charge with Tesla's NACS standard. With this new support, you can toggle on that your car uses on NACS charger, and then be able to use Google Maps to more easily find charging stations on your way. NIO will only consider launching extended range EVs when Tesla does, says the CEO. Quote, we will only discuss extended range vehicles when Tesla adopts that approach. To make a comparison, imagine shared power banks. It's more efficient than everyone carrying their own. Here on the day today, Tesla continues to run about 4,000 different ads with Google, and despite the almost 2% decline you're seeing today, option activity from institutional investors is very positive. You have seen 28 different trades totaling $9.11 million with a positive order value of 82%. Tesla's short interest of free float is falling back down quite dramatically to 2.87%. You now have $18.13 billion currently sold short in Tesla, totaling 79.8 million shares. Here today, you do have return shares of 260,000, borrowed shares 220,000. So that means on net, there's about 40,000 shares that are being covered today. UBS did come out with a more negative note around the Tesla Robotaxi. They say Tesla's upcoming Robotaxi is not expected to see a wide-scale deployment within the coming years amid potential regulatory and other hurdles, which honestly, that makes me even more bullish because, again, you don't want to see the markets price things in accurately. And really what I mean by this is look at the broader markets, okay? Broader markets soaring higher, hitting new all-time highs as the Fed cut rates 50 basis points and told you there's a problem, okay? Do you really want to be super long in this environment when all of the upside essentially is already priced in? No, it probably makes sense to be on the sidelines with some cash or in some hedges. That just makes most sense, risk to reward. Now, with Wall Street in the scenario of Tesla and the Robotaxi, if they're all betting that the Robotaxi is going to take years and, you know, maybe 3 to 5 years and it's going to be difficult to launch on a wide scale, then it makes sense to be a little bit more optimistic about that because maybe it's just a year away or even 2 years away. And that would be much better than the general consensus that Wall Street has. And that's kind of my view. It might take like a year, but that's way better than what Wall Street thinks. And that could be an upside surprise. CNN's Fear and Greed Index today is falling a little bit from yesterday. It was at 65. Today it is at 62, but you're still firmly in greed territory. Sentiment for Tesla is also improving today from yesterday. Yesterday you were bearish at 31. Now you are bullish at 61. Message volume is high at 63. Yesterday it was high at 64. And the participation ratio today is high at 55. The percent of stocks currently trading above their 50-day moving average is down to 63.68%. 3.42% of stocks are breaking below their 50-day moving average today. So it's not a great day. Not a bad day also, not a super bad day that is. The 2 and 10-year yield curve inversion is now uninverted 14 basis points. Once you get closer to about 50 basis points uninverted, that's when you're typically going into a recession. Now, basically the recession, stopwatch, stop clock is on at this point because you have been uninverted now for almost 2 weeks. And last but not least, if we take a look at Google Trends data for the Tesla lineup, Cybertruck activity is falling to 45, the Model Y is at 22, the Model 3 is at 20, the Model S at 9, and the Model X at 7. This is typically the slower period of the year, the late summer months for Tesla. Things start to pick up a little bit in Q3, and then Q4 is historically Tesla's strongest quarter. So we'll see if that is what happens again. But I will say things have gotten a little less affordable to finance a Tesla since the latest Fed meeting. 10-year Treasury yields are up about 9 basis points from the low at 3.62%. 10-year Treasury yields are currently at 3.73%. Not a big difference, but still slightly less affordable. So let me know what you think about this information down below in the comment section. You can see today on the low side of this wick, we found support at this support line that I have had drawn on this chart since yesterday. That's an important level I will be watching for. And this upside line here filling the gap is another important level above 246. And I think if you break lower, then you're really going to break lower and you're going to fall quite a bit, another at least $20 or so. If you break higher, you break above 246, then you can start that run to 300, maybe even a little bit higher than that before the Robotaxi event on October 10th. And history would tell us that after even 2007, September 18th, the same literal day you got a 50 basis point rate cut this year, the markets actually went higher for the 3 weeks following that 50 basis point rate cut. It was a little bit of a sugar high, and I wouldn't be surprised if that happens again. So with that said, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day, and I will see you in the next one.